October 2024. Russia's finance ministry publishes a document that most people completely ignored. Buried in the draft federal budget for 2025 through 2027, a single line item, 51.5 billion rubles allocated for precious metals. Purchases: gold, platinum, palladium, and for the first time in modern history, silver. That's $535 million over 3 years. Not a massive number compared to global markets, but here's what makes this absolutely critical. Russia just became the first major central bank to explicitly announce silver purchases for state reserves during this precious metals bull market. The first. And if you understand what central banks know, what they see that the public doesn't, you'll realize this isn't just Russia making a smart trade. This is a signal, a pattern that's appeared before every major shift in monetary history. And right now, that pattern is screaming that something fundamental is breaking in the silver market. Let me show you exactly what central banks see, why Russia moved first, and why the window to understand this might be closing faster than anyone realizes. Here's what you need to understand about central banks and silver. They abandoned it completely for over 150 years. Central banks stopped accumulating silver in the mid-1850s. The world moved off the silver standard by the early 1870s. For the entire modern financial era, central banks held gold. Only gold. They bought treasuries, currencies, bonds. But silver? Not even on the radar. And there's a reason for that. Silver was industrial. Gold was monetary. That was the division. Gold stored value. Silver got used up in factories, electronics, solar panels. Why would a central bank hold an industrial commodity? But something changed. According to reports from late 2024, Russia allocated funding to purchase silver alongside gold, platinum, and palladium for the state fund. This marks the first time any central bank has explicitly announced silver purchases during the current precious metals bull market that started in 2022. Russia is the world's 8th largest silver producer. 38.5 million ounces annually. They have domestic supply. They have mining infrastructure. And they just signaled to the world that silver belongs in state reserves. Not as an industrial input, as strategic wealth. Now let me show you what they're seeing that explains this move. The silver market is experiencing something that hasn't happened in modern history. 4 consecutive years of structural supply deficits. 2021 through 2024. The combined shortfall reached 678 million ounces. That's the equivalent of 10 months of global mine supply in 2024, according to the Silver Institute's World Silver Survey 2025. 2024 alone showed a deficit of 148.9 million ounces. Supply was approximately 1.1 billion ounces. Demand hit 1.16 billion ounces. And 2025 is projected to be the 5th consecutive deficit year. 5th straight year where the world consumes more silver than it produces. Now, you might think, supply deficits happen, markets adjust. Except silver can't adjust. Here's why. Approximately 70% of silver comes as a byproduct from copper, lead, and zinc mining. Miners don't dig for silver, they dig for base metals. Silver just tags along. Which means silver supply is dictated by copper demand, zinc prices, lead mining economics. Not by silver prices. Global mine production in 2024 was 819.7 million ounces. That's up just 0.9% from 2023. Basically flat. And here's the critical part. New primary silver discoveries have become increasingly scarce. Only a handful of significant finds in the last decade. The big diversified miners, BHP, Rio Tinto, Glencore, their capital expenditure plans show 0 new projects with significant silver byproduct coming online before 2030. 5 years. The supply squeeze isn't temporary, it's locked in structurally. But supply is only half the story. Let me show you what's happening on the demand side, because this is where it gets terrifying for anyone who doesn't understand what's coming. Industrial demand for silver hit a record in 2024, 680.5 million ounces, 4th consecutive record. And it's being driven by sectors that aren't slowing down, they're accelerating. Solar panels consumed 197.6 million ounces in 2024. That's nearly 20% of total global silver demand, and solar installations doubled in 2024. Each panel requires approximately 20 grams of silver paste for conductivity. The International Energy Agency project's continued growth. More installations mean more silver consumption that cannot be substituted. Electric vehicles used 80 million ounces. Every EV requires 25 to 50 grams of silver. Some estimates put a Tesla Model 3 at approximately 1 ounce. EV production increased 40% year over year. That trend continues. 5G infrastructure, AI data centers, consumer electronics, medical devices, every sector increasing silver consumption. Industrial fabrication represented 59% of total silver consumption in 2024, up from 50% a decade ago. Silver has transformed from a precious metal to an industrial commodity that's absolutely critical for modern technology. And here's what makes this unsolvable. Silver's unique properties: highest electrical conductivity of all elements, highest thermal conductivity, most reflective metal. These aren't just advantages. They're irreplaceable in high-performance applications. You cannot substitute cheaper materials when efficiency is paramount. Now, while all of this is happening, let me show you what central banks around the world have been doing. And this creates the context for why Russia's move matters so much. Central banks bought gold at record levels. 2022, 136 tons. 2023, 151 tons. 2024, 1,045 tons. 3 consecutive years above 1,000 tons. That's more than double the annual average between 2010 and 2021, which was 473 tons. Poland led 2024 and first half 2025 purchases, adding 90 tons in 2024, another 67 tons through mid-2025. Turkey, India, China, Kazakhstan, all accumulating. The National Bank of Poland governor stated explicitly that holding gold is a matter of financial security and stability. They're targeting 20% of reserves in gold. This isn't random, this is pattern. When central banks buy gold aggressively, consistently for years, it signals something. They're diversifying away from dollar dependence. They're hedging against currency debasement. They're preparing for monetary system instability. And here's the key. They're buying gold universally, every major central bank. But silver? Russia is alone, the first mover. Now, let me show you what makes Russia's position unique and why this timing matters. Russia faced Western sanctions in 2014 after Crimea. Then in 2022, after Ukraine, the full nuclear option. $300 billion in reserves frozen, cut off from SWIFT, excluded from dollar financial systems. It was financial warfare. And Russia learned. They spent the last decade systematically reducing dollar exposure. U.S. Treasury holdings dropped from $130 billion in 2013 to near zero by 2020. Gold reserves increased from 1,000 tons in 2014 to 2,335 tons by late 2024. They built alternative payment systems. They negotiated trade deals in local currencies with China, India, Iran. Russia isn't just accumulating precious metals because they like shiny things. They're building a post-dollar reserve system, and they just added silver to that system. That's the signal. Because here's what Russia sees that Western central banks don't seem to acknowledge yet. Silver is mispriced, dramatically. The gold to silver ratio currently sits around 72 to 1. Historically, that ratio averaged 15 to 1. When that corrects, and history shows it eventually does, silver's price needs to catch up significantly. If gold is trading above $4,000 per ounce and the ratio reverts even partially toward historical norms, silver's implied value could be $200, $250, $280 per ounce. Russia allocated $535 million for silver over 3 years. At current prices around $58 per ounce, that's approximately 9 to 10 million ounces. Not enormous, but it's the precedent that matters. Russia just told every other central bank silver belongs in reserves. And if other central banks follow, even modestly, the impact is massive. The silver market is tiny compared to gold. Total above ground silver supply in investment grade form is estimated at a few billion ounces. If even a handful of central banks allocate 1% of reserves to silver, that's hundreds of millions of ounces of new demand hitting a market already in structural deficit. Now let me show you what's happening in the physical market right now. Because the numbers tell a story that most analysts are missing. COMEX silver inventories showed significant fluctuations in 2024 and 2025. Registered silver, that's metal available for delivery against futures contracts, hit lows near 30 million ounces in 2023 before recovering to approximately 73 million ounces by early 2025. Total COMEX inventories reached extraordinary levels around 526 million ounces by October 2025 due to trade policy concerns and tariff fears driving metal into U.S. warehouses. But here's what matters. The London Bullion Market Association reported silver inventories fell to near all-time lows. December 2024 showed approximately 827 million ounces in London. Of that, reportedly, 151 million ounces backs unsecured ETF holdings. That leaves roughly 276 million ounces as actual float. And nobody knows how much of that is truly available. The physical market is fragmented. London showed acute tightness, with lease rates hitting approximately 11% in mid-2025. That means people were so desperate for physical silver, they'd pay 11% interest just to borrow it. That's not normal. That's a squeeze forming. In October 2025, an unusual price gap emerged. London spot silver hit $58.10 per ounce, while COMEX futures traded at $48.10, a $2 spread. Markets that are functioning efficiently don't show persistent price gaps like that. It signals dislocation. Physical scarcity in one location, paper abundance in another. This brings us to the critical question. What does Russia know that's driving this decision? Russia knows industrial demand is irreversible. Solar, EVs, 5G, AI infrastructure. These aren't temporary trends, they're structural shifts, and every one of them requires silver. Russia knows supply cannot respond. 70% byproduct mining, flat primary production, no new major discoveries. The supply side is locked. Russia knows central banks will follow. When one major nation adds silver to reserves, others will reconsider. China, India, Saudi Arabia, the BRICS nations. If they follow Russia's lead, even partially, the silver market transforms overnight. Russia knows the gold-silver ratio is historically extreme. At 72 to 1, silver is undervalued relative to gold by almost any historical measure. Mean reversion is eventual, and Russia knows the dollar system is fragile. When you're the country that had $300 billion frozen, that got cut off from SWIFT, that faced financial warfare, you understand that paper promises can disappear instantly. Physical assets cannot be sanctioned. Silver, like gold, has no counterparty risk. So Russia moved first. $535 million is modest. But it's the signal that matters. The message to the world: silver is no longer just industrial. It's strategic. It's monetary. It belongs in central bank reserves. And here's the timeline that should concern you. The announcement came in October 2024. Implementation through 2025 to 2027. And the silver market is already showing stress. 4 years of deficits. Industrial demand at records. COMEX inventories volatile. London inventories at lows. Lease rates spiking. If Russia's purchases remove even 17 million ounces from available supply over 3 years, that's roughly 5 to 6 million ounces annually. In a market with a 150 million ounce deficit, that's significant. But more importantly, if Russia's move triggers other central banks to follow, if China allocates even 0.5% of reserves to silver, if India follows, if Saudi Arabia diversifies, the cumulative demand could be hundreds of millions of ounces hitting a market that already can't meet current consumption. Some analysts suggest Russia's move could drive silver prices up 50% within 24 months. That was the projection when the announcement first appeared in October 2024. We are now past that initial announcement. Silver hit all-time highs above $58 in late 2025. The move is already happening. But the real question isn't whether silver goes up 50%. The question is what happens when the paper market can't deliver physical metal, when COMEX registered inventories drain, when London vaults can't source supply, when industrial users and central banks are competing for the same limited stockpiles. That's when premiums explode. That's when shortages appear. That's when the disconnect between paper price and physical availability becomes undeniable. We saw glimpses of this in 2020 during COVID. Silver hit $28 per ounce, but physical coins sold for $45. A 60% premium. Imagine that scenario with silver at $50, $60, $80. Premiums of 40, 50, 60% over spot. Delivery delays of months. Dealers sold out. And that's not speculation, that's math. When annual deficits persist and inventories drain and new demand from central banks enters the market, the physical supply simply isn't there. Russia knows this. That's why they moved first. Before the price runs, before other central banks follow, before the industrial users panic. Russia is accumulating strategic silver while it's still available, still affordable, still under the radar for most of the world. This isn't financial advice. This is pattern recognition. And the pattern says the same thing it said before gold exploded in the 1970s, before the Hunt brothers drove silver to $50 in 1980, before every major commodity shortage in history. The smart money moves first, quietly, before the public understands what's happening. Russia just told you what central banks know. Silver is transitioning from industrial commodity to strategic monetary asset. The supply deficit is structural and unsolvable. Industrial demand is irreversible. And the physical market is far tighter than most people realize. The window to understand this is measured in months, maybe quarters, not years. Because once other central banks follow Russia's lead, once the precedent is set, once silver becomes officially recognized as a reserve asset alongside gold, the game changes completely. Russia bought silver for state reserves for the first time in modern history. That's not a trade, that's a signal. And the signal is clear. Something fundamental is shifting in the precious metals market, whether you see it or not.